Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He's a mining stock expert and also an independent speculator. He was Doug Casey's protege over at Casey Research for almost 14 years. He was in charge of editing their newsletters. I used to read his newsletters, the free ones and the paid ones, all the time. He went and started his own newsletter, The Independent Speculator. He used to travel all the time to projects, boots on the ground, and look at potential speculations there for gold, silver, copper, uranium, a lot of different types of commodities. Lobo Tigre, thank you for joining me again.
Thank you very much. I have to jump in and say, used to travel. Travel is still, or rather boot leather is still a prime ingredient in what I do. I've just unfortunately trained a bunch of geniuses who are as good at it as I am, or getting there quickly. So now I don't have to do it anymore. I've outsmarted myself by building up a team that now they don't need me to do the fun part, which is to get out there and kick the rocks.
Well, delegation is good, right? So then you get operational leverage at your small business. So that's good in the long run. That means less work for you. You don't have to be hands-on with the business all day, every day.
Yeah, but I like that. That's exactly what's happened. This is a digression, but like I'm going to the conferences now and I'm doing the chairman type role, as it were. We're not that bureaucratic. But anyway.
Well, yeah, sorry about. I know you still travel. I just didn't know you travel as often to all the different sites. You told me in the last interview that you were delegating more of the site visits to more of your other trained geologists.
Yes, that's what I'm whining about, but it's okay. Life goes on.
Well, we're recording this interview on Thursday, September 19th, 2024. The gold price has rallied a lot the last couple months. It's down today, but we're post-Fed meeting yesterday when the Fed announced 50 basis points of rate cuts instead of 25, which a lot of people were expecting. The gold price is still well above 2,500 at $2,585. I want to get your thoughts on the profit margins for these producing gold miners right now. Do you think they have healthy profit margins, or are you worried that the costs are starting to creep up again?
Yes and yes. Clearly, unless you have a grossly incompetent management team, the increase in the gold dollar exchange rate, and I always say that because instead of the price of gold, because in my mind, gold is money, everything else is credit, right? So it's a Forex question. It's not a price like pork bellies or even copper. But anyway, the gold dollar exchange rate has accelerated faster this year. It's pulled a hockey stick than costs reasonably can be expected to have. I mean, even back in the 9% inflation days, we were seeing blowouts much more than that in mining costs. But on an annualized basis, overall costs shouldn't be rising 25% or something as gold is up so far this year. So yes, I expect increasing margins. Now, costs have gone up too. You might think, well, gee, copper's down, iron's down, oil is down. Shouldn't costs be down? Well, some are. But the sort of raw material input costs are a small part of the mining. Labor is not down. Labor, especially post-COVID, is hugely more expensive. And of course, regulation never goes down. And I don't just mean the actual regulations. I mean the cost of compliance and the burden of regulation always goes up. So the cost of government is a one-way arrow, always and ever upwards.
And that's a good point about labor costs.
Pardon me. Go ahead.
Oh, I was going to say it's a great point about labor costs. I think for most miners, they're at least 25% of the total cost.
Well, yeah, I mean, it's going to vary a lot. You've got your big, mines in South Africa with 10,000 people or something like that. And they can only work because, sorry, but they just don't pay those people very much. You try paying Canadian wages and those mines just don't work. So yeah, no, it's a major issue and we'll have to see, but there's an opportunity hidden in this conversation, Jason, in that the miners have underperformed so spectacularly. Our mutual friend Rick Rule likes to say that it takes real talent to take a 7-fold increase in your product, the price of your product, as in gold in the last go around, right, from 2001 to 2011, and to turn that into more negative free cash flow, as in taking your negative free cash flow and making it even more negative, which, if you look at the big producers, is what they did in the last big run up. So there's this thing out there that gold mining is a crappy business. That's Doug Casey's technical description, right? So, and it's not unjustified, right? That the most well-known names in the sector basically flubbed it last time. So it's quite reasonable for the person who might even consider investing in the space to look at the track record and come away scratching their head. The opportunity, though, is that this is changing now. We saw in Q1 that all three of the majors beat. Now, granted, the guidance wasn't that lofty, but still, they beat. And Q2 is looking pretty good so far. We're actually, I think we're in that point where people are starting to realize this is a real business. We can't just sell hopium. We have to deliver. I saw a headline this morning about a takeaway from the Beaver Creek conference being that the majors are all saying we're going to deliver discipline this time. So whether they do or they don't, we'll find out. But at least they got the memo, right? They're going to try, or they understand that it's important. So I do think they will try. And if they do, sorry, this is a long answer, but I'll wrap up. I mean, think about your typical Warren Buffett formula for a great investment. You want something with increasing margins, which is where we started with your question, and you want a moat around it. You don't want, everybody else to be able to jump on. Well, exploration is bloody difficult, and building a mine is, it takes years to get the permits and to build it and so on. So this is a business with a very natural moat, and one, by the way, in which exploration budgets get slashed whenever there's a downturn. So there's been a dearth of new discoveries, not none, but a dearth for years. It's going to take years for, it's hard to say this with a straight face at $2,600 gold, but, for low prices to cure low prices, that's starting to happen, but it takes years. So if you follow what I'm saying, we're just now coming to that point where the companies can deliver on these margins that we're talking about, and the competition can't just jump in. And that makes for, a kind of speculation, if you will, that even Warren Buffett types might consider. It'll be interesting to see what happens.
Well, we've seen Stanley Druckenmiller start to build positions in Newmont Mining and Barrick Gold the last 4 to 6 months. So he's one of the big names in the hedge fund community, although I haven't seen a lot of other big fund managers start to accumulate gold mining stocks, but he was the first, and we'll probably start to see more entities copy him.
Yeah, well, Druck is, I think, a little bit more independent thinking than some of the other well-known names. But let's not forget, I don't think it was Buffett or Munger, but somebody in their shop, somebody at Berkshire bought Barrick a couple of years ago. I think it's now a couple of years ago. They bought and they sold. They already got out of that position. But I remember it was a big shock. And I remember another company with the same ticker on a different exchange, like doubled overnight because everybody thought Warren Buffett's buying this. We're going to chase that momentum. But somebody on that team gets it, right? And so if what I'm saying comes to pass, if we see these margins improve, if the companies do deliver on the actual business of gold mining, never mind the hopium and promotion, but if they actually do their jobs, I think this will begin to qualify as the sort of thing that it's not just for gold bugs anymore.
I agree. And talk is cheap, though, for the producing gold miners. Like you said, their track record is bad mergers and acquisitions. During the last cycle, I think they wrote off over $70 billion in bad deals from like 2009 to 2016 or 17. There was an insane amount of write-downs for bad deals. So hopefully they don't go back to bad habits. Hopefully they maintain their profit margins there and costs don't start to rise rapidly. Actually, since you've done so many site visits, I want to ask you about ore grades. So we saw an article come out earlier this week from mining.com talking about the ore grades collapsing for a lot of copper and gold deposits. Now, you visited a lot of these potential mines. Is this something that you saw that was like very, very evident, where you saw like just grades were collapsed? Like, I can't believe they're even thinking of turning this into a mine.
Well, sort of, there's two ways of looking at this. One is that this is a trend that's been in motion for decades, right? We've been looking at, it used to be that 0.5% or 0.5 gram, for that matter, was considered low grade, and only like existing mines that had already had all their capital paid back could work at those kind of low grades. And now, with the depletion of the higher grade stuff out there and the demand, it's getting to be that, and so the bar is being lowered. We're looking at 0.4, then 0.3. There's a school of thought out there for copper, to your question, that holds that 0.3 is the new 0.5. It makes me nervous to go with 0.3. Yeah, when the stars align, everything is right. Your cost, it's right at surface. The deposit is shaped like an open pit, or what have you, right? Yeah, sure, 0.3
Is
can
that
work.
below 1 gram per ton by 0.3? Is that what you mean?
No, percent copper. Gram per ton is gold, percents for copper. So 0.5% used to be sort of like the lower bound. And what I'm saying is that over the years of being in this business, in the last couple of decades, I've seen that move down. So, would I say there's a collapse? Not really, but that bar has been lowered and lowered. And whereas before I might be willing to consider a zero point 0.4 because there weren't that many 0.5s, now we were starting to look at 0.3s. And what I was starting to say is, like, before it had to take a really special project to work at 0.3, but now in the price environment going forward, there are not just promoters and punters out there, but serious mining outfits that are looking at 0.3, 0.4 in a way that they wouldn't have before. So what I'm saying is this is an ongoing process, Jason. Is the recent change, if there is one, is probably more due to the sort of economic realities catching up with people. You start thinking that a big bulk tonnage, low grade operation is going to work, but your costs rise. And then guess what? Copper goes into correction and suddenly you're squozing, right? So it's a tricky business. And the way I'd like to simplify this for people, if you'll pardon my French, and I already used the word once, so I'll just say, Lobo's dictum is that crap is crap. It's always crap. And if something is difficult and something remains in the ground for decades, you might be able to produce a feasibility study that makes it look profitable and some surge of prices, like copper goes up to $4 or $5 and suddenly something that's been known for a long time looks economic. Yay. But the problem is that these things are like multi-decade mine lives. These are 30-year mines, that sort of thing, these big bulk projects. So you can't take the spike and say, oh, hey, it works. You have to take like the 20-year average, right? So, buyer beware. And if something didn't work before, it takes a lot to prove to me that it will work this time. So long story short is, yes, great copper projects are harder and harder to find. And, it'll be really interesting to see how the world moves forward, because even without the green agenda, Dr. Copper is absolutely essential for our civilization.
And for average gold grade deposits, I mean, we're barely 1 gram per ton, and we're headed over the next probably decade or less to below 1 gram per ton average. Copper, like you said, it's getting even worse. A lot of the producing copper mines, they've been producing for many, many decades. The new potential copper mines, for a medium-sized one, it's $1 billion of capital expenditure just to build the mine. For a larger copper mine, it's even more than that. And the grades are much lower compared to the past. For overall trend for the entire industry, would you say if the grades at the mine, if they start to fall substantially, would you say it becomes tougher and tougher for the mining company to be able to maintain or lower their costs?
Not necessarily. There are a number of cases where the mine's already built. It's already paid for. The capital has already been paid back. And so you just have sustaining cost. And, if you've already built a mega pit and there's some lower grade stuff at the bottom of it, but it's right there exposed to daylight, just you can mine it. You don't have to pay back the mine. So there are some of the lower cost operations, both in gold and copper, that people will point to. If they've made a discovery, Jason, that's only 0.3 or 0.4, and they'll say, oh, well, look at those guys. They're mining 0.3 or 0.4 over there. Well, yeah, but they already paid their mine back, decades ago.
Oh, so the infrastructure is already there, and they're just
exactly.
So what is brownfields exploration then?
Well, what I'm saying is that it's not apples and oranges. A new project has a much higher hurdle. And to say that the grades dwindling in the old existing mines are necessarily a problem, obviously it's not great. You want the grade to go up, not down, if you had a choice in the matter. But it's not the end of the world if you've already paid back your capital and you can afford to keep mining that lower grade stuff. This is why mines, they will stockpile lower grade material at the beginning of the mine life. They want to go after the high grade stuff, pay back capital as quickly as they can. And then you process your stockpile low grade material at the end of mine life because it's there, it's free. But anyway, we shouldn't dodge the issue. The issue is declining grades. Yes, that's real. Yes, it's a factor. Not everybody can do what I'm saying. And at some point, it gets so low grade that even with all the infrastructure, it makes no sense. Mines do get shut down even before they run out of mineralization if they're not economic.
Let me also add, it's pretty rare to have a case like a Fosterville in Australia where you have a marginal gold mine and then they drill below the initial deposit and they find much higher grades and the infrastructure is already there. And for what, 5 or 6 years, it becomes the highest grade, lowest cost mine for
Yeah.
Kirkland Lake Gold. It's very, very rare. It's very, very rare for another success story
Not just very rare. That's the only one in my career that I've seen like that. And by the way, I was there. I didn't make the discovery. I'm not the geologist. I'm not trying to take credit for anything. But I was there in the mine, touring it underground when we went down to see a new level they had just blasted. And we looked at the stuff and it was like, holy beep, right? This was much thicker. And the ore there, you could visibly tell what ran and what didn't. The sulfides were visible. And you could see this was like the higher grade above, but bigger and thicker, and it looked better. So it just happened that as they went deeper on that one, it got better. And it wasn't just drilling, Jason. They were in development and they found more and better mineralization than they expected. And then they did it again and again. Like it kept getting better for, not forever, but for a time. It kept getting better as they went deeper. And so I remember that. We made money on that one. That was back Newmarket had bought Crocodile Gold, which had the mine in the first place. And I went on that field trip and I came home. Actually, I don't even think I waited to get home. I sent out an alert and said, holy cow, like I saw something that is not in the press releases yet. And, I don't know what the assays are. So I didn't get secret undisclosed information. I just went on a tour and I saw this and I was like, holy cow. This is, never mind assays and feasibility studies. This stuff is going to hit the mill next week. Right. So
it's just an extremely rare case. I mean,
yes.
Normally.
Anyway, yeah, sorry, wax eloquent there, but that was a one time in my whole career where I've seen something like that.
Yeah, so normally for a deposit like Young-Davidson in Canada or Fruta del Norte in Ecuador, you see step-out drilling, exploration drilling, and then they expand the reserves. But you don't see exceptional grades and discoveries like what you do with Fosterville for 6 years. So
yeah, unless there's something on, it's a surprise when that happens. So like FDN that you bring up as an example, no comment on the company, but for the deposit, they started the mine with the higher grade, more consistent portions. If you recall, the original resource that FDN, that Aurelian came out with, was something like 13 million ounces at 13 grams or something. It was this huge monster deposit. But what went into the feasibility study when the Lundins built it was like 5 million ounces, because they went for the parts that were the most consistent and the most easy to mine. And then once you're underground and you're mining, then you can step out to some of these other distal areas. But as I recall, it was also a grade issue. So like as they step out, they'd have to make a surprise discovery. There'd have to be another area like their starter area that they're not expecting for the grades to get better, because they've already drilled around it. They already know what's out there. That other stuff that the rest of the 13 million that didn't make it in the 5 million original plan, that's still there, and it's known to be less good, which is why it wasn't mined first.
And Rick Rule said initially for the mine plan with the mill, there was metallurgy issues and they were able to solve them very quickly. So that surprised the market. And now they're having exploration successes there too. The deposit seems to be growing even faster than people anticipated, the size of it and the reserve replacement.
Well, yeah, I don't want to go too far down that rabbit hole because then it'll start sounding like I'm making a recommendation. But as the saying goes, right, the best place to find a gold or any deposit is in the shadow of a head frame.
So I want to ask you about the Lissen curve because I've seen you talk about it on Twitter and in your articles in the past. What is the Lissen curve?
Well, it's named after Pierre Lissen, and I guess he's the first one to popularize the idea. The ideas have been around for a while, but basically it's the life cycle of a junior mining company that goes from an explorer with nothing, makes a discovery, does the engineering studies, builds the mine, and then becomes a miner. That's only one of the two possible outcomes, or many possible outcomes, though. There's also the, explorer doesn't make a discovery, or explorer makes a discovery, but then it's not economic, or discovery made, looks economic in the study, mine is built, doesn't work, company goes bankrupt. There are a lot of different outcomes here. Assuming it's successful, though, as Pierre outlined it, it's a two hump camel type curve, if you will. There's this big bump up in the share price. The stock is share price over time. Sorry, the chart is stock price or share price over time. So there's this big surge at the beginning of the curve when a discovery is made. And then there's this slump in the middle. Some people call it the orphan period. Doug Casey liked to call it the boring engineering phase, where they're not, the deposit isn't growing by leaps and bounds. There's not all these high grade drill results, or if they are, they're infills, so they don't add anything. They're expected, right? And the share price slumps because it seems like nothing exciting is happening. And then we're building a mine, and the stock picks up again, and then question mark, what happens then? So I'm not sure where you want to go with that. A lot of people like to focus on the early part, the discovery phase of the Lissen curve. That's where the 10 baggers are. People love 10 baggers, or so they think. But that's also high risk. Nobody knows who's going to make the discovery, not even Rick Rule or Doug Casey.
I was just going to talk about, sorry to interrupt you. I was just going to bring up, so you talked, it's kind of a sine wave, like multiple waves that are going on. There's so much volatility in the Lissen curve, though, because the discovery happens and the stock pops, but then the market figures out, oh my God, they're going to have to dilute the stock enormous amounts of money if they're going to build the mine on their own.
Yes. That's a funny thing. Like you say it, the market figures out. There's nothing to figure out. That's known from the beginning. That's known before anybody makes a discovery. There's going to be dilution. This is why there are prospect generators out there, because they have to give away the lion's share of anything they discover. They only get to hold on to 30 or maybe 40% of a project if they're lucky. But the other guys, the optionees, they're paying all the high risk dollars to explore that puppy, which usually ends up in failure. And then if they have to build it, it's on that other party, the majority operator owner, to arrange the financing. And many of the contracts will have a carried interest actually for the junior partner all the way through to production, or at least mine finance. And the larger party has to help the junior party with the mine finance. So you're going to get diluted one way or the other. If you hold on to it 100%, but you got to issue, shares after shares after shares to study it, do the engineering, build it, you as an original shareholder of the discovery are going to get diluted by that process no matter what. Whereas if you sell the majority stake to somebody else, okay, you take all the dilution up front, but then it's done. And the risk and the financing cost and all that is shifted onto other shoulders. So I really like the prospect generator business model. It just takes a lot of patience. It's difficult for me as a newsletter writer to have too many prospect generators, because you just got to buy them and sit on them for years until they get lucky.
Also, the share price volatility in the Lissen curve, because after the discovery, and then once the market figures out how much capital is going to be required with the pre-feasibility and all the funding costs to start proving up the deposit, I mean, the shares do crash. So that's right there in the Lissen curve. So like newbies who are new to gold stocks, and we're going to start to see more people coming into gold stocks and complaining, why are my gold stocks not going up? They're going to be victims, I would say, of the Lissen curve then.
Well, a couple of things, Jason. You're a smart guy and you know that, but I think a lot of people don't figure that this is about the dilution. Like, they don't do the math and understand what's coming this way. A lot of people, you'd say, oh, the drills aren't turning anymore, or oh, hey, there's no more discovery anymore, and stock's down, and then I'm out of here. They don't think it through. And then they also get just very emotional. Another Doug Caseyism is to say that these junior exploration stocks, they're not family heirlooms. They're burning matches. And if you hold them too long, you get burned. So everybody loves a discovery. People pile into a discovery, and then they refuse to take profits even, let alone exit. They made 10 times their money on this great discovery. They're so excited. They just can't bring themselves to sell because it's their darling. And then it's down 20%. Well, no, oh no, I can't sell now. I'm down 20%. Now it's down 50%. Oh no, I could never sell now. And they just talk themselves into a grave for their money that way. So yes, you have to do the math. You have to understand the life cycle of the Lissen curve. And the good news is that there is that second bump at the end, the pre-production sweet spot. That's my favorite place, because okay, it doesn't have, in most cases, the 10 bagger potential that a discovery has, but your odds of success are much greater. Most companies don't start building a mine unless they're going to be able to finish it. Some of them fail, but it's rare.
Would you say that the Osisko mining deal selling out to Goldfields with the joint venture, is that a success story of the Lassonde curve, or do you think those types of deals are bad then in the long run?
Well, I can disclose now because it's on my public track record that I own that stock. I expected it to be taken over, but I didn't quite double my money, but I think it was like 75, 78% gain, something like that. And I didn't hold it that long. I think it was maybe a year or something. I don't remember exactly. I'm talking to you live here, so I don't have the numbers prepared. But so I wasn't expecting them to build that mine. And the takeover was my, if not optimal, but at least sort of expected outcome. So for me, a win's a win. Okay. If they had built it themselves and become the next big miner in Canada, could this have gone on to be the next Agnico Eagle or something? Maybe, but there's a lot of ifs before you get there. To begin with, there's the dilution that we talked about, and then you build the mine. It needs to work as advertised. And think about it, Jason. This is a pet peeve of one of my team members. I've got a Serbian fellow. His name is Vukasin. He's just like this tornado of due diligence knowledge. He's an incredible powerhouse. But he challenged me the other day. He says, Lobo, when was the last time you saw an underground mine built in Canada that made money? And I had to think and think. And, it's been a while. The successes have been open pits recently. And we've got Greenstone going into production now. It'll be interesting to see if this is the new example. But the one that came to mind is, it's been so long. It was actually Alexco. The original Alexco did make money on Keno Hill when they first put it into production. And then silver went down, and their silver Wheaton terms of their offtake deal killed them. But the mine did make money. It's an underground mine that did start off, and it did make money at first. And so it struck me, wow, like that's a long time ago. I'm not sure when that was, but that's a long time ago. So, this project, Windfall Lake, it looks fantastic, but that's a paper, that's a study. Well, we won't know until they build that thing, $1 billion or whatever it's going to be, build that thing, start shoveling the dirt through the plant and see what comes out the other end. So there's all that risk. Assuming all of that even goes well, then we need to grow properly, make the right acquisitions. So to hold from discovery to get to the point where you're an Agnico type quality operator, there's you think there's volatility in the Lassonde curve. The volatility you'd have to deal with, it would be like picking Microsoft in 1980 and holding it for 40 years to get a 100-bagger. Technically, that's possible, but who on earth would have had the gumption to stick with it through all the ups and downs? And who
Excellent
would have known
point.
of all the startups? How would you know that Microsoft would be the one?
Well, look at Apple Computer. Apple was almost bankrupt, right, a number of times over the years.
Right.
People forget this. I mean, I have friends that were buying, I think, Apple shares in 2007 or 8, and there were serious issues there when the iPod was rolling out with the MP3 player. People didn't know if it would succeed before the iPhone. Steve Jobs turned things around before he passed away and turned it into a powerhouse. But there were a lot of times there where people thought that the company could go bankrupt. But I think the shares were below $10 for at least a couple of years.
If half the stories about that company are true that we read in these books and things, there were numerous opportunities for that company to go bankrupt, like to be one phone call away or one bank deadline away, right, from failure. And that happens in the mining space too. So we're gotten off the side point here, but the point is that you can't fall in love with the discovery. There is so much that can go wrong between there and something like a great mining company that you can just own and forget about. That frankly, it's like this Microsoft thing. Nobody could have known that in advance. So it's better to take your profits as you go. If you've got a risk-free position, sure. If you like it, hold it. But there's nothing wrong with moving in and out of positions. And the rational question isn't which one of my stocks do I love the most. The question is, where do I allocate my capital for the highest likely returns? Not bearing in mind likely, like that's a probability question. None of us know the future, but you got to ask yourself, okay, we've already made the discovery. What comes next? How long will that take? Is this if this money is likely to go nowhere or slump for a couple of years before the mine's built? Maybe I should not just take profits, but sell entirely and buy something else that has more immediate potential.
Are we seeing juniors raise a lot of funds, say 10, 20, $30 million fairly easily for drill programs right now? Are we at a gold price where that's easily happening?
Well, you probably should ask one of the financial guys that question. I'm not an iBanker. I'm not into the finance end of the business so much. My sense is that despite the all-time nominal highs in the gold dollar exchange rate, the financing spigots haven't really opened up full bore yet. That said, it's also true that even in the most glum parts of the market where people are all these IR guys and gals are going around saying, oh, it's not our fault, we can't drill because we can't raise money because of market conditions. Well, if you've got a tier one asset, if you've got something that's really great, the money is there. The Rick Rules of the world, the loan sharks of the world, they're out there with a toothy grin and a checkbook saying, market's bad, this is just what I want to hear, right? So if you can't raise money, you're saying something about the quality of your assets. Quality assets can get them funds even in a bear market.
Well, I would say the royalty and streaming companies, so Franco-Nevada, Wheaton Precious Metals, Royal Gold, the mid-tier ones like a Cisco Gold Royalty, they're actually in there buying like rights on potential streams. They're funding the exploration. So the last cycle over the last 10 or 15 years, that wasn't happening nearly as much. It's been happening a lot more lately.
Yeah, that is an interesting thing. The streaming companies it's not the same as last time around. They've come of age, as it were. There's more of them. They have deeper war chests. You're probably right. I haven't done the math on that, Jason. So if you've done more homework on me than that, then hat tip to you. But it sounds right to me.
Well, I would say Franco-Nevada, the stock price isn't really recognizing this quite yet, but I think they've been doing the last 12 to 18 months. I know everyone's upset about Cobre Panama and there's no resolution yet. There's tons of uncertainty. I think they've done a lot of smart deals the last 18 months for potential growth, doing some of those types of high optionality deals at pretty low valuations.
High optionality is another way of saying has very little now and hopes to have a lot more in the future. So I must say that I've looked at some of the deals that I've seen recently this year, let's say, and I haven't been terribly excited about them. I mean, I've got that My Take service where it's not there's no portfolio or whatever. It's like Consumer Reports, and I evaluate companies that readers request. We have almost 1,000 companies under coverage now. And when I see one of these, tier one companies, as you say, blue chips in the space, buy a royalty or a stream on something that has a thumbs down in my database, it makes me do one of two things. I go back and I look and I say, did I miss something? These guys are they've got a bigger due diligence budget than I do, 100 times or 1,000 times. Did I miss something? Do they know something that I don't? And I'll look at that. But if not, then I just have to say, they're taking a chance and I don't support this acquisition.
Well, I guess that's why you're diversified, right? So if you are Franco-Nevada, you don't bet the whole thing on just one company. That's the issue there with some of these smaller miners like an Argonaut Gold, a Mangino, Victoria Gold, some of these other companies. They have to bet most of the company on one miner, one mine expansion.
Yes, that you're right. Yeah, well said. I don't think I need to add more. The diversification is mitigation for them. What looks like they gave how much to that company? What? For a Franco, for a Wheaton, it's really, not going to hurt them if it doesn't work out.
Yeah, they don't have to sell the asset for pennies on the dollar like Argonaut Gold and Mangino, and how Wet Alamos Gold is practically next door and got the Mangino mine for a huge discount.
I think we're on the same page there.
I want to transition now and ask you about rising geopolitical risks. So elections in Colombia, elections in Mexico. Are we going to start to see more of these countries either make the permitting process take longer, many years longer, millions of dollars more, or outright banning open pit mines? Do you think that that's where things are headed?
Yes. I think all of Latin America, it's kind of like people talk about Africa. Africa is not a country. It's a continent with a lot of different countries with different levels of risk. But overall, political risk in Latin America is absolutely going the wrong way. Previously staunchly pro-mining jurisdictions like Chile even are getting to this place where they think that, the mining that was the bad old days. We don't need no mining. We're a rich country now. We're a not just developing, but we're a top tier country in this space. And so um, it doesn't seem to matter which party wins the elections. Each successive government there seems to make things worse for mining. It's still possible. I'm not saying Chile is a no-fly zone, but it's going the wrong direction. Same thing in Peru, where especially big open pit projects seem to just be absolute magnets for protests. And even if you can get them permitted, you get your mine camp burned down and all kinds of stuff happens. That it's very difficult to advance there. And look at Mexico that you mentioned. We'll have to see if the new president's bite is as bad as her bark. But my secret sources in Mexico, I have family down there, and I spent a lot of time in Mexico, and almost everybody I speak to, and not just political opposition or whatever, the people who oppose her think she's like the devil incarnate, going to be worse than AMLO. The people who support her, they think she's going to be better than AMLO, meaning worse than AMLO if you're pro mining. So it just looks really bad. We'll have to see.
Now in Mexico, they did remember Fortuna Silver and Gold, 2 years ago, they pulled the permits on the producing mine, and then they got them back, but they had to pay a lot more money. Do you think that we're going to see similar games, or do you think that this could be a lot worse?
Well, interestingly enough, they won in court. That was so bogus. They got a 2-year extension when they said, oh, they got a 12-year extension, and then the government, the regulator said, oh, sorry, we meant 2 years. It was a typo. It was like a typo 146 times in all these documents, 12 instead of 2. It was so ridiculous. Obviously a grab. And Fortuna recently won in court, but of course the government has appealed it. So we'll just have to see what happens there. But that this sort of thing can even happen at all, it's so egregious, Jason. It just, it tells you that this is a place where rule of law is crumbling, and that is not good for any sort of business, including mining. So
yeah,
I'm not willing to hold Mexico plays. By the way, I have completely eliminated Mexico risk from my portfolio because it looks so bad.
So you want more certainty first.
Wrong. Sorry, I'm willing to be proven wrong, right? If there are people saying, oh, Claudia's just saying all this stuff because she wanted to get elected, she can't backstab AMLO until she's got the presidential sash, we'll have to see. Well, we'll see. If it turns out that she's more pro-business, guess what? I think the stocks will still be on sale and I'll be able to buy back in. But if she turns out to be as bad as I fear, I'll be very, very glad to have no way to lose money on that.
Okay, thank you for that. So it sounds like as of now, there's just too much uncertainty. Would you say that Argentina is the most pro-mining out of all the Latin American countries right now then?
Yes.
yeah, because there's lots. Well, maybe Ecuador too, because there's lots of investment there too. But yeah, a lot of capital.
No, completely different. Sorry, Ecuador is another basket case country. Okay, it's got a pro-business president. It's got a president who's pro-mining enough to, like, by decree, help out mining companies. But that doesn't keep the people in the countryside from rising up in arms in opposition. And that matters, right? There's Loma Larga. I don't think that's ever going to get built. And it doesn't matter how many legal victories the companies have. It's just one of those things where it's become a poster child. And remember, Ecuador is a place where the government had to flee the capital a few years ago because of protests over inflation. So this is highly unstable. And who the person in charge happens to be at any given time doesn't change the nature of the will of the people, as it were. Whereas what's going on in Argentina is very different. There's a true revolution going on there. And it's not just one crazy anarcho-capitalist got in charge of the country and is doing crazy experiments. That is true. But that happened because the people were so desperate they voted for it. And he started to make changes quickly enough that had visible improvements, right? The inflation rate going from triple digits down to almost nothing within 6 months was, almost a miraculous thing, inconceivable by modern economic standards. And that has got him support in the real world, in the countryside. So there's at least a debate happening in Argentina now. And there are certainly mining provinces in Argentina that now, unleashed by the federal government down there, are moving ahead. So I see, of all, to your initial question, that's why it was simply yes. It is a place that is visibly moving in a direction that is more pro rule of law and definitely more pro mining.
And things can change quickly. So as of now, Argentina is the best. We'll see if that holds true over the next year or two. We'll see what happens.
A single bullet could change that, Jason. And I'm not the praying type, but if I was, I would absolutely be praying for that not to happen, because it's about one person right now.
Yeah, I mean, we're in like insane amounts of assassination attempts that are happening because of like just bad government with the Secret Service. Is just the blunders are absolutely insane right now.
If we can have multiple assassination attempts on a former president, and supposedly, the developed world, the leader of the developed world, where is it not possible? So yeah, enough said.
Well, it's just, this is what happens when the longer a government's in power, the more resources, and they always say, "Oh, we need more resources. We can fix the problem." Okay, sure.
Yeah, it's really interesting to me. I don't know how much you want to talk about Argentina, but it's really interesting to me that this happened at all, because the guy before Milei was leftist, and terrible things happened and he got voted out. Milei, but that cycle, we've seen that numerous times. So the guy before him was more right wing. I forget his name. Not Macron, Macri was his name, and he was a businessman. And he had pro business ideas, and he was going to cut government and all this stuff. But he just didn't have the cojones that Milei had to go in there and do it. So he went in with I think, a positive direction agenda, but not the backbone to really make any difference. And so things got worse. And so he got voted out. So, the pendulum swings. This thing in Argentina is the first time that I've seen where it has swung so far that it kind of got, it got so bad that something really good has a chance. Because the harsh medicine that he's administering, it's painful. I mean, there is no doubt that there are a lot of people in Argentina suffering directly from what Milei is doing. And for that to stand, and pretty much everybody, air quotes, has to understand, we're sorry, but this is the only way forward. As bad as it is, everything else is worse.
You mean the people who are suffering, a lot of them were the overpaid government employees, the bureaucrats who were stealing or leeching off of a lot of the others.
I get it. As a libertarian, I'm with you on that. And, you can criticize labor union people as saying, well, they're overpaid. The market wouldn't pay their wages. But at the end of the day, somebody has a mortgage, somebody has their kids in college or whatever. They have their expenses, and you're going to cut back their pay. Whether you want to say they deserve it or not, they're going to suffer.
Well, my point is government should have never gone to that size and scope. So now you have, like, I'll give an example. I've lived right outside of Washington, D.C. for almost 25 years. I mean, there's government employees that harass me on social media telling me that they're grossly underpaid at $191,000 a year with their healthcare insurance and their retirement plan. And I had to block a couple of them on social media.
No, I hear you. I remember, oh gosh, in one of my entrepreneurship camps, like 20 years ago or something, somebody asked me if there was a surefire investment. I said no, but one of the closest things you can do is buy real estate just outside of a national capital. Because if there's one sure thing in the world, almost in the human condition, it's that government grows, national capitals grow. So this was in Eastern Europe, and I think this student was a Belarusian. So I said, buy a potato farm just outside the commercial districts of Minsk and wait for the city to grow. And that happened. They built a beltway around the city, and everything, potato farms and dachas that had been, outside the city are now inside that beltway or near the intersections of where the radial roads out of the city hit that beltway. And that real estate has gone way up.
To add to your points there, I mean, Argentina, it's the reputation of corruption. Argentina was insane. I can't remember exactly how many years Kirchner was in power, but didn't they find, like, one of her mansions, she had like an entire filled up to the ceiling of dollars, euros, there was gold bars. I think she even had Bitcoin on USB drives, billions of dollars worth of stolen funds, and she didn't do any prison time.
Suitcases tossed over the fence. I remember that. Yeah, all of it is insane. But incompetent kleptocrats that get caught are one thing. That doesn't make them a rare occurrence. I think the thieves in the first world are just as rapacious. They're just much better and smarter at hiding their tracks.
Or they have friends in key places and they put their friends and family members on the boards of charities, and the corporate donations for campaign financing go there instead, and that pays their high salaries for friends and family members.
Yeah, but let's not go down the political rabbit hole any further.
Okay. Well, both parties are doing that, because both parties, there's lots of lawyers here in both parties.
Yeah, well, yeah. A pox on both their houses. You know, this is one of my blessings. As a Puerto Rican, I can't vote for president. So whichever one wins, it's not my fault.
Oh, so you had Puerto Rican citizenship before they changed the tax laws then? The capital gains tax?
Puerto Rico is part of the United States. I'm a U.S. citizen.
But is there's an exemption though, right? Where if you establish residency in Puerto Rico,
you're confabulating some things here. Puerto Rico is part of the United States. There is no Puerto Rican citizenship. You're a U.S. citizen. But Puerto Rico not being a state, you can't vote in federal elections. We have no senators. We have, what do you call it? Observers in Congress. But there's no congressman, there's no senators. We can't vote for president because we're not a state. We're not an official part of the union. We're a territory. So there's no different citizenship, but you can't vote in federal elections.
Okay, I was just thinking of the no capital gains tax exemption that they put in the last 7 to 10 years.
That's a different issue. And by the way, this is a beautiful place, and if you like surfing and beaches and stuff, it's really a haven other than just a tax haven. But on April 15th, there's no better place in the U.S. to be.
And that's why we have a lot of hedge funds moving down there, like my friend Harris Kupperman and George Gammon and some other people.
Yeah, Cuppy's down here. Adrian Day's down here. Peter Schiff's down here. Gordon Holmes is down here. There's a bunch of people.
As we wrap up here, I want to ask you about the budget deficits historically. Do you think that there's going to be a long period of deflation, or do you think that historically, like both political parties, they're not going to allow deflation because they can't tax it? They'll get voted out of office.
Yeah, I think do another Doug Casey quote, the chance of deflation or anything more than a spike down for a month or two, like in the crash of 2008, the chances are slim to none, and Slim's out of town. Deflation is an excuse to spend more money and, turn their printing presses into full overdrive mode. Why would the kleptocrats in charge not take that opportunity with both fists?
And with the election coming up, it seems both parties, the plans for whoever's in Congress, the controller, no one's talking about spending cuts. No one.
Yeah. No, austerity has been erased from the dictionary. It's so bad that even mainstream commentators, the Bloombergs of the world and the Yahoo Finances and the CNBCs, MSNBC, all these guys that, never saw a government program they didn't love. Even these guys are talking about how, well, isn't that kind of inflationary? And both Trump and Harris is, everybody's promising all this stuff. How are you going to pay for that? It's interesting. There are liberal media bias is a real thing. And there are reporters that I've watched for years who clearly have these blinders on and they're not aware of it. And even these people are saying to the Harris types, like, yeah, but how are you going to pay for that? But it's just so bad that at some point it's, you can't ignore the fact that the emperor has no clothes.
Well, I think over the last 5 or 6 years, a lot more of the monetary inflation that for decades was going into asset prices, home prices, the stock market, the S&P 500, a lot of it has finally started to hit the consumer for consumer prices. So people that were not aware of inflation and shrinkflation, they finally become made aware of it the last couple of years.
Yeah, I was just a kid, but I'm old enough to remember the inflation in the 1970s. Even as a kid, it was such a powerful force. It was such a powerful fear that people had. You talk about conversations around the kitchen table. Well, I remember that as a kid. So for me, I've been, it's no surprise to see the power. But I guess I'm Gen X. So anybody in the next generations down, pick your alphabet name, they haven't lived it until these last few years. An intellectual understanding didn't give them the gut check that experiencing high inflation really has, does. So it's not surprising to me at all that, had such a shocking impact on people that, they just weren't prepared for it, and they're not going to forget it easily.
I agree with that. Well, look at the number one issue in polling for both parties is inflation in the economy. You have talking points claiming they've got the consumer price index to around 2% now and it's headed lower. They have inflation beat, Lobo. They have inflation beat. The
Yeah,
Fed's going to
right.
cut rates. Happy
Oh,
days are here
sure.
again.
We've
What?
got $1 trillion of spending in the green agenda. And did you see that video clip? I don't know if it's been verified, but there's a video clip of Biden saying about the Inflation Reduction Act that we should have named it what it was, green spending. And yeah, the cat's out of the bag.
Well, there's green energy lobbyists and ESG people here in the DC metro area in my town. I saw two McLarens driving around. It was probably stolen ESG money. So I have tons and tons of those ridiculous hypocritical stories. Happy days are here again though, because you have the central banks back in a rate cutting cycle mode again. They're like, oh, we've dealt with inflation. The consumer price index for the U.S. and Europe and England and all these countries, it's 2% or lower. So they have inflation beat. It's time to cut rates and start doing stimulus again.
Yeah, it'll be interesting to see how this plays out because there's a chance that inflation might actually hit the Fed's target. I agree with Gunlock on this. If it does, it doesn't stop there. It probably keeps going, and they realize, holy beep, we've gone too far. But there's a chance that it doesn't. Some of the sticky components, lower rates have people all excited about housing. Well, if that brings people back to the housing market, well, housing prices can go up. They can start going up again. The rates may go down, but the prices may go up. And that would impact the so-called owner's equivalent rent and other BS in the CPI. As if the easy money floodgates open up again with, either candidate starts doing any of what they're talking about, forget monetary policy, fiscal policy. If you've spoken to Lynn Alden in your interviews, I don't know if you have.
Yeah, I'm friends with Lynn.
Talked about her fiscal dominance thesis. I think she's really got something there. So, the Fed has all but declared victory. I mean, Powell declined to say so in words in this press conference yesterday, but they've all but declared victory on inflation. And so if it stalls here, if it remains sticky, maybe fluctuates in bits and pieces a little bit lower, but then goes back up again, that's a problem for the Fed. And if that happens in the weakening economy that, anybody besides Janet Yellen can see, that really starts smacking of the stagflation of the 1970s. And then it'll be really interesting to see what happens to commodities and monetary metals.
Yeah, I agree. I think that's where we're heading with inflation coming in waves similar than 1968 to 1980 or 82 period, where the inflation came in waves. They thought they had it beat. I think one of the sides here is on the labor side. You have politicians and bureaucrats in the election because of the inflation the last few years. They're promising to get workers' wages raised. So that's what a wage price spiral that hurts the small business owner. That's less supply of small businesses closed down and wages are forced higher. So it's going to create all types of distortions, not just on demand, but also on supply.
Yeah, I'm with Peter Schiff on this one. There's no such thing as a wage price spiral. That's like saying a price spiral. Wages are just a price. So yeah, you throw money at something, then there's more money in the economy. At the end of the day, switching my economists here, Milton Friedman, always and everywhere, monetary phenomenon. It's interesting that in advance of whatever the two candidates are going to do, M2's gone back up again, or it's rising. I'm not saying it's at a new all-time high, but it went into reverse for a while, and now it's going back up again. And all the promises are for more fiscal largesse. So it'll be interesting.
Well, I think M2 is not rising because the banks are lending the money out into the economy for how well the economy is doing. I think the M2 supply is growing because the banking system, the private sector banks, they're creating new currency units to buy U.S. treasuries.
Well, that's an interesting thought, Jason. If you're right, basically the money supply is going up, but velocity isn't. So what happens if forward expectations about inflation change the velocity of the money to the upside? So now you've got more money created, and then you add higher velocity of money to it. And I understand Austrians out there that velocity of money is a flawed concept, but just metaphorically speaking, right? You add velocity into this equation, and I know that equations are nonsense in this space, but just go with me on this, right? What does that do to inflation? I think history doesn't repeat, but it may well rhyme. in the going forward in the 20s may look a lot more like the 70s.
Well, I think the major macro issue, and we've seen this for the last couple of years, post-Russia sanctions in 2022, these non-G7 central banks, they've just decided within a couple months of those Russia sanctions, they will be dollar cost averaging gold tonnage. They will not be large purchasers of treasuries. I do not see that trend going away. It seems like that trend is growing, actually.
Well, that's an interesting one too. There's so many things going on out there. But one of the things that we've seen this year is that you've got these sovereigns out there buying gold, and they're not buying gold because they think the Fed is going to cut rates. They're buying gold because it's not the dollar. And okay, they're not stupid. They're not going to go out and buy the spikes or whatever. If the gold dollar exchange rate goes up, they might hold off a few months, wait for better prices. Sure, I can see that happening. But are they going to suddenly decide, oh, it's safe to put all our money in dollars and have the Fed be able to shut us off, or the United States lock us out of the system? Of course not. Now, I'm not saying, the BRICS are going to adopt a gold-backed currency tomorrow and it's the end of the dollar tomorrow. Don't get carried away. I'm not saying any of that. But I'm saying this de-dollarization trend is a very real thing. It will take a long time to play out, but it is happening. And it goes in one direction. And gold is a big part of it. And, that's very bullish. And to be able to say that something is so bullish going into it from an already nominal record high, it makes me a little bit nervous. I don't want to be the guy who in 2011, when gold hit 1900, says, yeah, it's going to the moon from here, right? But I look at the macro, I look at the technicals, I look at, what's going on in the world. And I just don't see what knocks the stuffing out of gold in the near term. So yeah, I'm bullish.
Well, the Fed's balance sheet during 2000, the last gold spike, 2010 or 11, they had just started the quantitative easing programs. It was nowhere near the size, the Fed's balance sheet, that it is now.
Yeah. Yeah. No, yes. Good point. Well, there are a lot of things that are different. And by the way, I should say, going back to the 1970s comparable, a lot of people are making that. Lynn Alden likes to compare to the 1940s more. I get that, but the dollar was still theoretically related to gold at that point in time. So that for at least monetary metals, that makes the 40s less comparable for me from my projections. But on the other hand, in 1971, you had Tricky Dick Nixon slam the gold window shut on de Gaulle's fingers. And that was a one-time event. That's not part of the scenario right now. So you had no price discovery for 200 years. And then suddenly the gold dollar exchange rate was free to fluctuate. And there was at least, somewhat price discovery. So that's never going to be repeated, Jason. We're not in that same situation now. And so, no, I don't expect anything to look exactly as it did last time. If you're looking at the charts of how the 1970s went, I would not expect a pattern to look like the charts of the 1970s. What is similar is that it looks like we're going into a period of sustained high inflation and economic weakness at the same time. So I don't know how the charts play out, but it's
well. I think also the U.S. economy, the U.S. weren't they in the 70s? They were still a creditor nation, so the dollar was not in any jeopardy necessarily of collapsing per se, because we were still a creditor nation, and we didn't have the budget deficits that we did back then.
Yeah, all those trillions of dollars outside the United States weren't in danger of coming flooding back in the way they are now. That said, there's so much trouble around the world that I agree with Brent Johnson, the dollar milkshake guy, on this. I just don't see demand for dollars going away anytime soon. I mean, if you're Argentina and China, or if you're Peru and Slovakia or whatever, you're not going to denominate your trade or your deals in local currency. Those are still denominated in dollars. That creates demand for dollars. So
citizens save dollars.
That takes a long time to unwind.
Those local citizens too, and you saw this in Argentina probably when you traveled there for years, they would rather save US dollars than Argentinian pesos for many years. So that creates demand for the currency. Now, we have to make a differentiation between the dollar and treasuries though. So those countries are going to say, well, I don't support US policy. They could confiscate our treasuries like they did Russia. So that's different than demand for dollars versus demand for treasuries.
I agree. But these systems, it's fungible. The dollars slosh from one pile of money to the other, and if you're using that milkshake straw and you're sucking dollars out of one area, they'll flow in from somewhere else. Actually, let me. I need to go to another appointment here, Jason. But let me give you a quick story here, personal story. When I was a kid in Mexico, I was very entrepreneurial, and I made money doing, garage sales, all kinds of things. And I thought I was being smart, putting my money in the bank. I had a bank account even. And then I woke up one day, and the government had lopped 3 zeros off the peso.
Wow.
That was a painful lesson. Like you went to the bank.
Is that like a 90% devaluation?
No, 3 zeros. So it was like 1,000 pesos is now 1 peso.
Oh my God.
So
That
it's
is
like
insane.
it's a new peso, right? In theory, shiny and bright and new, right? But so like imagine going to the bank, right, where that sort of thing happens. So I learned to be very wary of inflation and devaluations and things like that. And so after that, I said, actually, I'm telling the story wrong. There was another triple digit lopping of zeros. This one, sorry, this is going to be embarrassing, but I don't want to say something that is not true. That one where I woke up and went to the bank the next day, that was a doubling. It like the peso was devaluated by 50% compared to the dollar. So like if it was 10 to the dollar, it was now 20 to the dollar or something like that. It was more at that time. And then the triple digits came later. But the point is, I went to the bank and I thought I had X amount of money and I had half X of the amount of money. Like it was this huge shock. And so I went to my elders and I said, well, what do you do? And I said, well, we own dollars. And I thought, oh, yeah, great. America, bubble yum, movies, all that, yeah, wonderful American stuff. So I started saving in dollars. This was in the 1970s. And I came back to live in the United States in 1978, 79. What was happening in that time? Inflation was going nuts. Volcker was fighting the beast, or was yet to fight the beast, excuse me. So I came home and I had put all my trust in dollars. I had started saving in dollars for years. And now I find that dollars are not any more trustworthy than the Mexican peso, right? It's inflating the same way I saw before I woke up and went to the bank. So it was this giant shock for me as a kid, and I have never forgotten that. And this has been part of why I've been an advocate for hard money my entire adult life and even before, because I experienced what inflation and devaluations lead to. And to some degree, this is a main motivator for me in what I do. Yes, I pick stocks and I try to make money in the markets, but I also see myself as an educator. And I'm trying to teach some semblance of economic rationalism to my audiences out there. And I hope that they never have to experience something like this. So, and if you think it can't happen here, remember the 1933 confiscation under FDR. If you think it can't happen here, look at the attempted assassinations, plural, on a presidential candidate. It's just not true that something bad can't happen in America. It's not the America it once was. And so for whatever it's worth, that's my personal experience with real money versus funny money, paper money. I started saving in silver and then later gold, and it has served me well, as insurance should in times of trouble.
And that's the history and nature of governments and empires. I mean, what you described, when a small government, it becomes more powerful, large military, becomes a world power. I mean, this is a cycle that governments go through, unfortunately, throughout history.
Yeah, I think Ray Dalio would agree, but I think we'll need to leave it at that.
I want to thank you so much for your time today. If my listeners want to check out the Independent Speculator and your newsletters, how do they do so?
independentspeculator.com. The quick version is I have a free weekly newsletter. If you sign up for it, you may or may not like what I say, but I promise that I won't spam you. You get one email per week.